Hi, good evening. Today is October 30th. I'm giving you the recap of October 30th and giving you some ideas for some possible trading tactics going into tomorrow, October 31st. This is for the E-mini S&P futures contract. Start off by looking at the monthly chart. It's safe to say that we are going to one time frame down 1 month for the month of October. Next important downside reference really is this May low, and we'll talk about this May low in the other coming up soon. On the weekly chart, we're still one time framing down. 1 week, 2 weeks, 3 weeks, 4 weeks. We're in a 2 week balance area, and you can calculate your two week halfback if you use that as a gauge to see where we traded within this 2 week balance area. On the daily, you can't say we're one time framing up one day. We weren't unable to eat into this excess of yesterday. Instead, the market uh, traded higher on some stronger volume, higher volume than I've seen in the last couple of days. The volume for today, this is New York Stock Exchange volume, 4.8 billion shares. Usually, these days we're running about 3 billion, 3.5, something like that. So today was a lot more volume compared to what we're seeing, and you see the result of today, a strong day up. However, we're still in yesterday's range. So what is that? That's an inside day. We're dealing with another inside day. And in addition to that, we're in a 5-day, 1, 2, 3, 4, 5-day balance area. How do I get the balance area? We have this day. This day closed within this day's range. This day closed within this day's range. And because this day closed within that range, that makes it 3 days. On to the fourth day. This day closed within this day, but this day closed in that day closed in that day. This day, 4-day range, and now we get the 5. So what we have is a 5-day balance area, and within that 5-day balance area, we currently have a 2-day balance area going on right now between yesterday being Monday the 29th and today being October 30th. So you want to play the inside day, kind of like the balance trading rules. We break out and accelerate, break out and fail, or remain in balance. So usually I like looking at the inside days. If we take out today's high, my destination would be the Monday's high to see how the market responds and go from there. Or vice versa, if we take out today's low, my next destination is yesterday's low, which I'm very interested in yesterday's low, but I take everything a step at a time, and I'll show you why in a second. Now we're onto the profiles, but I got my open high-low close bar with the value area. Let me show you guys a neat trick with using Windows traders. We can fix the interval. Where is it? You know what? I'm not even going to waste time on that right now. My mind's drawing a blank on how to find it. Nevertheless, you can decrease. Yeah, here it is. Sorry. I just drew a mental blank. When you have a elongated profile, you can shorten it by just increasing the price interval. Right now I have it at 1, so that shows at quarters. You can increase it to halves or dollars. A dollar would be 4, but I'll just do it by halves just for now, so that way we can fit everything that we want to see on the screen. Okay, so Here's today. Value is unchanged. However, we have a spike in the profiles. You'll see it, and I'll show you the spike. So we also want to play the spike trading rules, and I'll show you how the inside day and the spike trading rules, how they all come in and play together, or you can use them to get you on the right side of the trade. One thing I want you to pay attention to, though, is this low from yesterday. It is one tick above May's low. That is not a positive to me. It's not a strong sign of buying if they wait till the May. That's not the May low. The May high. I apologize. Yeah, no. It's the May low. I'm sorry. Today's not my day. Been to the doctor, just receiving all kinds of crazy news regarding my health. This is the May low, so it's a tick. It's a tick above the May low. Something you want to pay attention to. Okay. So we have the value area, values unchanged. Let's go to the profiles. Here's the daily profile. I fixed the price interval to reflect 2 instead of 1. 1 would be extremely elongated. And I just want to show a couple of things on the daily profiles. So here is the inside day that I'm talking about. Yesterday, today. Okay, here's our 5-day balance area. 1, 2, 3, 4, 5. Using this high is our balance area. Okay, so here's our inside day. Here's the spike. Right now, the spike negates everything to the downside, which we do have a couple of anomalies to the downside. So say, for example, let's play in the inside day. We take out this high. We want to see continuation to Monday's high. And then that will be, I guess, the line in the sand to really see what the market wants to do. The market wants to continue to trade higher or fail. So we're definitely watching what does the market do. Where is value form in relation, value, not price. Where is value form in relation to the spike? If we open in the spike or above, that's positive. Shows that this late day probe higher. Prices are being accepted. If we open below the spike, now again, I'm just talking about the opening. That's initially negative because prices weren't accepted at the onset of the market at this higher probe higher, at this price probe higher. So something you want to pay attention to when the market opens. However, during the day, you want to see where does value develop in relation to this spike base. You want to know where value develops. So that's the most important thing you want to pay attention to. We can very well gap tomorrow morning. And if we do, we have the gap rules, which is go with all gaps that aren't filled fairly quickly. But keep in mind, if we do gap and we don't get any acceptance above Monday's high, we're talking about a gap in a balance area. And chances are, or the odds favor, at least filling this gap within the balance area. Now, if we gap and we trade higher outside of here and stay higher, then, we have a new auction to the upside. So just something to keep in mind. If you have any question regarding that concept, let me know and I can better explain it to you. So that is the possible upside scenarios. Where does we open? Number one, where does value build in regards to the spike base? If we gap, can we continue to go higher? If we're just hanging around here, just be on the lookout for a possible touch or filling the gap, but the spike rules will still be in place. For anything to the downside, you have to begin to see price trade within the spike, stay below the spike, and eventually value build below the spike. Or you get a double distribution to the downside, which that negates anything to the top, and it's a new auction to the downside. So we're looking at downside scenarios now. We have an anomaly as a possible target, maybe on a gap fill, or maybe challenging a spike. I don't know, but this is something you want to pay attention to, that there's an anomaly here, and we have another anomaly, which is the point of control is 10 wide. Okay, we have a bunch of weak references down below here that I keep a track of, but most importantly If the market begins to trade with reckless abandon, and we have seen that towards the end of the day where the market just sells off for no complete reason, and the market begins to trade outside of today's low, you want to keep in mind or be aware that this low is a week low, is one tick above a monthly low. That's not very promising. And so again, if the market is demonstrating that it takes out this low, has no desire to come back within range, and continues to go down, more than likely, I'm willing to bet, they're coming back after this low. So you could have another play to the downside, but you take everything a step at a time. If the market opens here, it has a lot of work to do. And if it does take out this low, then you want to pay attention, try to figure out a way based on your trading system or how you enter trades or what you look for to get on board with a possible destination, more than likely destination of the downside. But again, you take everything a step at a time. Where do we start? Right now is the spike base. Where does the market open? Where does value build? Do we gap? Do we keep the gap? Can we take out Monday's high and stay above Monday's high, keeping the auction to the upside, which I believe this is a poor low, but a poor high, I'm sorry, but let me fix the intervals. Let's get a real read. It is. We take out yet Monday's high. The market's coming after these anomalies, and it's going to take out this poor, or not going to. You take it in sequence, a possible target depending on momentum, the time of day, one time framing, etc. This could be another target to the upside at 23.75, I believe. But as you see, the market has a lot of work to do. A positive sign is a gap. Hold the gap, get outside of Monday's range, continue to go. And this could be a late day target or depending on what the market does. So that's the upside scenarios. Downside, once again, you got to get below this spike and do a lot of work. Here's one potential destination, this anomaly. The second potential destination is this prominent point of control of 10 wide. Anything below that, you first want to get below the value area low. Stay below the value area low. Take out today's low. Stay below today's low. And then challenge this low. So that's all I got. Let me know if you have any questions regarding the concept of an inside day, the concept of the spike base, and another concept of the gap rules. So 3 things you need to be paying attention to for the upside. To the downside, it's pretty simple. Do we open or do we trade back in? Can we stay back in this spike? Does value build clearly within this spike? No overlapping. Because even if it begins to build below the spike, value for the day is still be higher. So value has a lot of work. There's a lot of work to do. And if value can't do that, then you can expect another rally to the upside, or the only thing that will allow price to continue lower, even though value is higher or overlapping and higher. The only thing that would allow that to happen is a double distribution to the downside, signaling a new auction. So that's all I have for you. If you have any questions, please give me a jingle, and I'll be happy to answer any questions that you have. This is Olawale Okebola with Spartacus Trading Corporation, hoping you have a good night.